Welcome back to the Manna Financial Freedom Course, and I'm so glad you're here. If you don't know me, my name's Natasha. I'm an independent financial advisor and a financial coach, and this course exists because I believe that financial freedom isn't just a nice idea, it's your inheritance. So we're going to walk towards this together, one session at a time. Now, if you have been following along, you already know that in our last session, we got honest about where our money's actually going. We talked about budget, spending, all of it, and that takes courage. So well done for doing that work. Today we're going into session 3, and this one is close to my heart because I know how many of us carry debt quietly. Maybe you haven't told anyone the full picture. Maybe the numbers feel overwhelming. Maybe you've tried to tackle it before and it hasn't quite worked out. Wherever you are, there's no shame here. None. In this session, we're going to look at the different types of debt, what the Bible actually says about borrowing, and most importantly, we're going to look at real practical strategies that you can use to start clearing it. The snowball method, the avalanche method, debt refinancing, we're covering it all. And yes, there are tools in your pack to help you put an actual plan together. So get comfortable, grab a pen. If you've got your workbook to hand, even better, and let's get into it. Welcome all back to session 3, where we're going to talk about debt. Hopefully you've all got your pens and papers or your notepads to hand. And I hope that you've had a good week so far and that the rest of the week is joyous for you. So let's have a look at the agenda for today. First thing first, we're going to recap on our last session, which I promised I would do, and see how you got on. Now, this isn't a shame you type session, right? So if you haven't done the homework, I'm not going to ask you, did you do the homework? But some people have, and it's your opportunity to share. And I'll share a little bit about when I did it. So we're going to recap on last session. We're then going to remind ourselves of the kingdom principles we've talked about so far and some that are coming up. And then I'm going to go into understanding debt, explaining debt to you and debt repayment strategies, some debt traps, and then we're going to action plan. I'll also share with you some places where you can get help if that's what's needed. As a recap, last session you were given 3 tasks to complete, and hopefully you were able to complete them. So the task was to complete a budget planner. And that was to look at your bank statements, 3 months worth, and write down exact figures of what you spend and what you spend it on. And then I also asked you to complete a 7-day spending tracker, which was to keep a track of your spending over 7 days. And it wasn't necessarily the things that come out of your bank account through direct debit, but just those ad hoc things where you touch your card almost without thinking. We wanted to see what those things are, and hopefully you have done that. When you've done those things, then I ask you to look through them the same way we did last week and see if there's anything that you could see that you are able to do to decrease your outgoings. And just as a reminder from session 1, where we talked about your vision, the vision is your motivation. So remind yourself why you're doing this, because it's not necessarily something that gets you excited and wakes you up in the morning to fill in a budget planner. But if you're doing it for a purpose, and the reason is because I want to be financially free, because I want to experience X, Y, Z, whatever that looked like to you, then that's your motivation. So it's really important that you have a vision of why you're doing these activities that I'm asking you to do, because you want to achieve that vision. So don't forget to refer to your vision when you feel like, oh, this is not what I want to do. I wish I could make budget planning exciting, but you know what is exciting? Being financially free. So let's look at some of the kingdom principles to remind ourselves of the things that Jesus told us about our wealth. As a reminder, the first session we talked about not worrying. Jesus said, I've got you. And I'm paraphrasing here, right? So Matthew 6, verse 31 to 33. He also told us that he knows what we need. Matthew 6, verse 32. And he also said, don't seek money, seek him. Yeah, seek first the kingdom of God. Follow kingdom principles. Ultimately, that is what Jesus was saying. And then we talked about the parable of the minas in Luke, where the master said, do business till I come. And then also in Galatians 6, verse 7, we're reminded that whatever we sow, we reap. So if you sow poor money management, then you reap poverty. So that's why this matters, because not only does the Bible say it, but actually experience shows us that. And then in the last session, we are going to pick up on this again. We talk about use what I gave you to increase and multiply. The two stories of the talents and the minas both say the same thing. The job is to multiply. And that's not just your money, but also your talents and your gifts. It's to be fruitful. And then the theme of writing it down. We looked at Habakkuk 2, verse 2, where the Lord said to him, write it down, make it plain, so he who reads it can run with it. But there's so many other instances in the Bible where the Lord gives instruction to write it down. So it's really important. But not only that, it's proven that when you write it down, you remember it more. And then the other one mentioned in the talents, the story of the talents and the story of the minas, one in Luke, one in Matthew, to whom is given, much more will be given if you are a good steward. So the people that had already multiplied, they were given more. Why? Because they'd shown themselves to be good stewards. So that's really what this course is about, is how can I be a good steward so God can bless me and trust me with the things that he's blessing me. So today's session is going to continue in the same vein. However, as I said today, we're going to talk about something that can hinder you in your journey. Even if you don't have debt, believe you me, I've worked in finance long enough. There are some temptations out there, and I just want to highlight to you what they are so that you don't fall foul of them in the future, because it's not hard to. By the end of this session, you will understand the different types of debt. You'll understand the debt repayment strategies that you can use to get rid of debt. And we'll also talk about what the Bible says about debt and debt traps to avoid. And then, as usual, we are going to talk about what action can you take. So I'm going to ask you to update your action plans with the things that you can do to reduce your debt or repay it. And I will show you how to do that. So don't worry, I'm going to walk you through that. But before we do that, I just want to recap on last week's session. And also, I want to allow time to answer any questions. If you did it and you got stuck, or there was something that happened, whatever it is, you might have a testimony, whatever it is, please feel free to share. There's no pressure, only if you're comfortable. So I'll start with what my findings were when I first did this exercise. One of the first things I learned was that I could live on way less than I anticipated. And what that told me is I was spending money on things I didn't need. Now, I don't believe that the Lord wants me to become a miser. However, if you're a steward of something, you need to understand what you're spending money on. See, I wasn't using my income to be productive. And I also wasn't planning for the unknown. And we discuss this more in the next session, because next week we talk about saving and investing. But I also didn't maintain a budget for non-essentials, things like clothing, shopping. I just spent as I wanted to and not necessarily limiting that spending. So that was my finding. When I did the spending tracker, I was astounded at how much I spent on coffee. It was roughly about £50 a week, bearing in mind coffee. I used to commute. So coffee from a coffee shop is £4, nearly £5. And sometimes I'd buy one there and going home as well. So that was my big thing. And what I did about it is I bought a coffee machine and bought pods, which made it a lot cheaper. So I didn't stop having the thing that I enjoyed, which was coffee, but I found a way to enjoy that at a cheaper cost to myself. And I didn't feel like I was being a poor steward at that point. So that was my finding. Is there anyone who wants to share what they found from the homework? Thank you all for sharing. And I will say that none of these are surprising. These are all things that I have come across. And I've even seen people save a considerable amount on things they didn't know they were paying for. This isn't a one-time thing. The spending tracker, you can do anytime. And I would recommend you do it every so often, just to keep an eye on what you're doing. But the budget planner you need to have in your habits, at least monthly. set aside time. It gets a lot easier because you've already written out the basics. So the only thing you're doing is updating them, but it allows you that time to just sit with your bank statement. And I can do my review in less than an hour. Looking at my bank statement, looking at the budget planner, ticking things off. Yep, paid, nothing untoward. Or actually, I need to cancel that direct debit, or I need to change this, etc., etc. And the other thing that also you would include is things like when things mature, you need to keep a record of that. So when I say mature, I mean like insurances, when they come to fruition, don't forget those. Make sure you have adequate time to look on the search engines and find yourself the cheapest deal. The closer you come to the date that it's maturing, the more expensive it is. So if you know that your car insurance is maturing on the 10th of Feb, you should really be looking in the 10th of Jan at least. And they tend to prompt you at that point. So that's the only other hint and tip I would give you. Let's move on to debt. Most debts can be put into the following categories. They can be secured, which you can see here. I'll just get my laser up. Secured or unsecured. They can be revolving or installment. Secured debts, what are they? They are debts that are secured by collateral, such as your car or your home. So they would be in this area. Unsecured are debts that are not secured on anything. So most personal loans are unsecured for this reason. And then you've got the two types of payment. You've got installment, which means that you repay in regular installments, and generally each installment would include part interest and part of the principal that you've borrowed, versus revolving credit, which is a debt that doesn't have a fixed payment. It will always have a minimum payment, but the interest is calculated every month and is based on the balance at the time. So I am going to show you some examples of where different types of debts sit within this chart. I'll also show you the implications of those types of debts. You've got here secured debts, revolving, so revolving secured debts. You've got unsecured that are revolving. You've got secured that are installment and unsecured that are installment. So that's the four boxes that you see here. Let's have a look at some debt and where does it sit in. Sometimes you'll have a line of credit. These are not as common nowadays. They used to have these. Woolwich used to do them quite a lot. You have a line of credit, which is like a credit card, but it's attached to your mortgage, and they decide how much they'll give you. And you can draw on it when you want and pay it back when you want. It's quite flexible, only if you had equity in your property. So that's secured revolving. Then you've got a mortgage. So a mortgage sits in this box. It's secured on your property and it's installment. So you usually pay part interest, part capital. In the early years, it's mostly interest, and towards the later years, it's less interest and more capital. Then you've got car loans, which sit in the same box, usually secured on a car. Depending on the type of car loan that is, this is just like a normal car loan, but you've got so many different schemes nowadays. Store cards, they're unsecured and revolving. Credit cards, unsecured revolving. Payday loans are the same. Overdraft sits somewhere in the middle because they're not exactly revolving, but they're not exactly installments. Student loan, which is receiving quite a lot of flack at the moment, is an installment, unsecured. And then a personal loan, which if you remember I said is unsecured, and you'll have part interest and part capital. And then you've got the hire purchase, which is another type of deal that you can use for buying a car. So these are the common types of debt. Now, do you think secured lending, secured revolving, unsecured installment, or secured installment debt is most expensive? So you're absolutely right. All of you have pretty much chosen the correct unsecured revolving, and I'm going to show you why that is the most expensive. But before we do that, just look at what's in the unsecured revolving and then think about what do you think's the most common debt that people have? Because everybody doesn't have a mortgage. So, the mortgage isn't really the most common debt. You will probably agree credit cards and store cards. So the most expensive is the most common. let's look at how unsecured revolving debt works in practice. I'm showing you this one because this is the one that I think is most common, so that's why we're going to spend time looking at it. And hopefully, if you don't have a credit card, you will understand credit cards better as well. This is an example of a credit card with a realistic interest rate of 29.9% and a balance of £7,000. In this scenario that you can see on the screen, this person pays £200 a month off their credit card of 7,000, right? So I'm going to talk you through how this works. So £7,000 the starting. The interest on 7,000 is £174.42. They then pay £200. That brings the balance down to 6,974 and 42p. Then they have another 173.78 added. They make another £200 payment. We've got £6,948 and 20. They then make another payment of they then have another interest payment of £173.13. They've paid £200 again, and the balance is 6,921.33. So why do you think I'm showing you this? This person, and these are realistic case studies, this person's paid £600 across 3 months. How do you think they feel when they look at the balance? They had 7,000 and they've only paid off £78.67 from the balance, even though they've paid £600 payments. So this is revolving credit. And the reason we call this revolving is because the interest is charged on the balance, which results in you paying interest on top of interest already paid. So hopefully that makes sense. This is why this type of credit should never be seen as long-term debt strategy. Why do people get tricked by it? And I use the word tricked because I don't want you to feel guilty. That's not what this session is about at all. We are not taught this in school. So we think, oh, I can have that thing now, and it will only cost me, say, £30, whatever the minimum payment is. But really and truthfully, that interest is continually building up. So it should never be seen for long-term strategy. It should be paid off in full every month. If you can't do it, then it's too expensive to have. It is the most expensive and the hardest to repay. Now, the only exception to that is if you're on a 0% deal, which usually will not last forever. There's usually a period of, say, 14 months or whatever it is. If you repay it in the 0% period, then that's good. If you do not, then do not touch this type of debt. And I'm going to show you in a second another example of this. But before we do that, we just have to see what Jesus said about debt. Jesus didn't ever tell us categorically that debts are a sin. The Bible doesn't say that. However, there are parts of the world system that are not the kingdom system. So when I decided I want to be financially free, I started to inquire of the Lord. And one of the things that he told me was that I needed to repay my debts. So I started to read the word to understand what I could learn from past mistakes. As I said, this isn't about making anyone feel guilty, okay? I've walked this walk and I'm still walking this walk. I'm just educating you so you actually go in with your eyes open. But Proverbs 22 verse 7 showed me that the rich rules over the poor and that the borrower is servant to the lender. And I think I said it last week, I've never seen this disproved. If that lender wants their money back, you have to pay them back or they can take you to court. So you are not in charge of that situation, no matter whether it's a mortgage. As a matter of fact, with a mortgage, they usually will start court proceedings a lot quicker than if it's an unsecured debt. Romans 13 verse 8 says, owe no one anything except to love one another, for he who loves another has fulfilled the law. That's the law. So we should owe nothing to anyone. And sometimes I'm sure you may have experienced this, but the things that can cause problems in families and friendships can be money, lending money to friends and family and them not paying it back. Well, the word says owe nothing to anyone except to love them. So that is the law. And then Deuteronomy 28 verse 12, the Lord will open to you his good treasure, the heavens, to give rain to your land in its season and to bless all the work of your hand. You shall lend to many nations, but you shall not borrow. That's the blessing that the Lord gave us. So what I realized studying these scriptures was that debt was never in the kingdom's plan. And I had followed the world's pattern because going in 0% deals and all of these other deals that are glamorized, if you like, in the world, it's really easy to fall into that trap because we want that instant gratification of whatever we're looking to buy. The world tells us that debt is part and parcel of life, so we almost form that belief. But when I studied the word, I realized that the kingdom's plan is totally different. So the good news is there's always ways to repay debt. And what I realized was being a good steward, it attracts God's blessing. However, I had to make a change, and I encourage you to become that good steward. Remember what the scripture says God doesn't want us distracted by worrying. How are we going to pay our debts? What if we lose our job? How would you pay your debts? Could it mean missing church to work more or not being able to be dedicated to God as much as you'll be tired working multiple jobs? Would that debt become our idol? Very easy to do. If this is true, then we already know that this isn't God's plan for us. So I understood why the Lord preferred me not to borrow, as this doesn't lead to freedom. And remember, that's his promise. And like I said, one of the promises that he gave to the children of Israel was that they would lend and not borrow. And in Deuteronomy 15, verse 6, it says, For the Lord your God will bless you, just as he promised you, you shall lend to many nations, but you shall not borrow. You shall reign over many nations, but they shall not reign over you. So this is the blessing of God. So why would he want us to be beholden to a lender? I definitely don't believe that is the truth. Knowing that I don't think this is God's plan, I believe that this is a journey. And whilst this might not be something you can do immediately, i.e., pay off your debts, if you continue to follow these principles, I believe you will be able to repay these debts. And I've had people already phoning me and telling me they are debt free or near debt free. This year, they'll be debt free. And it gives me such joy because that's already lifting that worry. Now, the other thing as well, which is why I wanted everybody to attend this session, is because even if you don't have debt, you might have children, grandchildren, nieces, nephews. We need to pass this on because what you will find is you pass the same habits that you have onto your children. And so they then become borrowers because I saw mummy with a credit card or I saw auntie with a credit card and auntie looks nice in her outfit and her hair's always done. But then it becomes almost a little bit glamorized and you don't even realize you're having that impact. And I do believe that everyone on this course will be debt free if you stick to the kingdom plan, not because I say so, but because God said so. But this isn't a race. I understand everyone's in different positions. Different people have different levels of borrowing. Remember, I said this isn't to shame you, embarrass you. You weren't taught this. That's a fact. The government have studies that confirm that's why they're bringing this into schools. But now you know, when you know better, you do better. So now let's start to change things because what's done is done. And I believe that the Lord gave me not only this course, but he was very specific about debt. Because you would think if I'm going to talk about debt, that I'd be talking about credit scores. Actually, I'm not. I started to put that in the course, and the Lord said, take it out. He doesn't want me to teach his children to be good borrowers. Okay, there's no such thing as a good borrower in the kingdom. There is in the world, which is what your credit score will tell you. But in the kingdom, there's no such thing as a good borrower. There's blessed and favored, and that doesn't entail borrowing, as we've seen with the children of Israel. Ultimately, there are two key strategies to paying off debts quicker. And depending on your circumstances, you may find one more beneficial than the other. This is where your budget planner comes into place. And we need a budget planner to work out how to repay our debts. So having completed your budget planner, if you haven't yet, please do it this week and then come back to this to do this activity. The spending tracker is to show you where you could reduce your spending. Some of you have already highlighted that, which is great. And by making those changes, you should hopefully have some additional money that you can put towards your debt repayment. Currently, you'll be making the mandatory minimum payments, I imagine, right? But we're not talking about the mandatory minimum payments. We're talking about additional payments on those debts. So let me explain strategy one. So strategy one is known as the avalanche method, and it entails documenting all of your loans, and you start repaying the one that has the highest interest rate. And then once you've repaid that, you start to work your way down to the cheaper debts. The advantage of this strategy is that it will likely mean that you will pay less interest in the long run. The other strategy is known as the snowball method. This method entails you paying off the smallest debt first. And I will show you some examples of this. There's also an infographic which I'll post to the WhatsApp group so that you can see this. And it is in the workbook if you've already bought the workbook. So these are the two methods in practice. Now, there's no right or wrong as to what method you choose. The difference between the two, avalanche saves interest. Snowball psychologically makes people feel better because they're repaying their smallest debt. So when you repay a debt, you get that high, that feeling of happiness or achievement and accomplishment. So it's psychological, not necessarily the cheapest in terms of interest. So let's look at this in practice. What would this mean? So here's someone who has a £7,000 credit card, a £5,000 personal loan, and a £200,000 mortgage. So you can see here, if you were using the snowball method, you would repay the £5,000 personal loan first. That's the smallest. And then once you'd repaid that by making overpayments, you'd then go on to your credit card, and then you'd go on to your mortgage. The advantage of this method is it can help you build up that momentum and motivation because you start to see your debts decreasing. So in the same example, if you were using the avalanche method, you would have started with your credit card instead. Why? Because the interest rate's higher. Remember, you start with the highest interest rate. Once you've repaid that, you then move on to a personal loan, which has an interest rate of 6%. And then you would start overpaying on your mortgage once you'd cleared those. The difference with the two is this one would save you interest, but it's clear to say that neither of these are based on you not paying the normal monthly payment. These are methods to make overpayments. As I mentioned earlier, when you completed your spending trackers and your budget planners, you can see where you can realize some extra cash. Even £20 a month, £50 a month, they make a difference. It could save you a considerable amount of interest. Now, it might mean sacrificing for a period of time, but it will be worth it. Once you've repaid your debts and you're debt free, your budget planner will be smiling at you and you'll be able to do a lot more with it. Remember, the goal is to be free. Financial freedom does not include debt. We have to be repaying our debts. It doesn't matter if it takes you 5 years, 10 years, or 2 years, or 12 months. It's not a race. It's the activity. It's the habit. So there are a couple of tools that you're going to get in the chat, and you'll also get these in the workbook. So I'll just explain how you use them. So the first one is the debt summary. As the name suggests, this is a summary where you just write all your debts down. So it's quite straightforward. Hopefully it's self-explanatory. You do need to write everything on there. Don't miss out the interest rates. Those are really key. You want to know what interest rate you're paying. A lot of people don't know what credit card interest rate they're on. With credit cards, they are variable, meaning that the banks can increase and decrease as they see fit. So it could be that you started on a particular interest rate and actually you're on either a higher or a lower one. So do make sure you get this information. And then you will see there's two columns. There's the snowball position and the avalanche position. You'll have the infographic to remind you which is which. If, for example, you were using the snowball position, then you just put number 1 at the smallest balance and number 2 at the next balance. So you can see which one you're going to work on. And the avalanche would be based on the interest rate. So depending on which route you're going to take, you would work on 1 or 2 of the columns, not both of them. So once you've done that, there is a box for additional payments because you'll know from your budget planner how much money you've got spare. So if it's £50, then you would write in here £50 on that debt you're going to pay, depending on the option you've chosen, £50, and you will set that up so that it's automated. Now, you might find they won't take it via direct debit. You may have to set up a standing order, but I would encourage you to automate it. Don't do it in a way that you have to manually do it every month. I find automation just makes life easier. And if you can do it as close to your payday as possible, if you're employed, that will help as well. The next tool that you've got is a debt tracker, and you can record those payments so that you're keeping track of the payments that you've made. Each time you make a payment, you'll update the date of the payment amount and what's the new balance. So this just is a manual way of you seeing the impact of your payments. Because we are so electronic driven these days, we don't take time to look at these things because we can just open an app, which we never do. The reason that I'm getting you to write things down is because we need to be aware of what is actually happening. Again, I said to you that take an hour a month to do your budget planning. That would include this. This is an activity that you would also do. And review your finances, review your action plans. As you start to repay debts, you'll see that you'll have a bit extra. Just put it on the next step. Remember, this is a journey. As Solomon said, the race is not for the swift and the battle not to the strong, for we all have both time and chance. That's Ecclesiastes 9, verse 11. The key is, how do you use your time? Now, I will tell you a little story. My pastor did sessions on this many years ago, and she was talking about this. And sadly, some people who needed this didn't take action. Years later, she's repaid her mortgage. She's very comfortable, and they are still in debt. I encourage you, please take action. Don't leave this because it doesn't get better, it gets worse. Now, there is another strategy that you can use, which is debt refinancing. This can make a big difference to the overall interest you pay in some instances. So I'll show you an example. Let's go back to the case study that we just discussed. You'll remember there was a credit card with an interest rate of 29.9%. And that interest rate is quite common for credit and store cards. Remember, they're revolving credit and should only be used over a short period of time. So it would make sense to refinance this debt. The right solution will be dependent on your individual circumstances. However, this example gives options that this person might want to consider. Now, I will say, however, that these options are only options if you've got a decent credit score. If they remained on the credit card, they would repay the debt in full by 2030, and they would have paid £6,092 in interest. So you can see for 7,000, it's cost them 6,092. It's nearly double that they would pay. Versus if they moved to a 0% balance transfer card, continued paying the £200, they would pay it off 3 years earlier, 2027. But in terms of the interest they would have paid, it would be £558, considerably less. And that also includes they would have paid a transfer fee. So if you have got a credit card and you've got good credit, use 0% balance transfers, but not to keep spending, to get it down. Now, some people say, I don't really have the ability to do that because I know I'll be tempted to keep using the card. If that's the case, then look at an unsecured personal loan. Now, interest rates have gone down since I did this. So this interest rate was 6.2%, which was realistic at the time. The payment for that loan would be £198.64, and they would pay it off at March 2028. A few months later than the balance transfer, but they would have still only paid £746.93 in interest versus staying on the card, ignoring the situation and it never going down or going down extremely slow and paying 6,000 in interest. Refinancing can be a great solution, but as I say, it is only a solution if you have the ability to do so, and that will depend on your credit score. And if you have had any missed payments, that can affect your credit score, but it is something to consider. We're talking about debt and repaying debt. And I said to you at the beginning, this isn't to make anyone feel bad, because the truth is that if you have debts, you're not alone. Some of the statistics in the UK, and this probably is higher now actually, it suggests there is a major problem in the UK. Our debt figures per capita are higher than the US. and they were expected to rise when I did this in 2024. So the average household debt is £65,665. The average credit card, remember I said that's the most expensive type of debt, is 2,518, and the average unsecured debt per adult, this is 4,287. Now, bear in mind, there's some adults who have none. Some people have got a lot more. So this is data from the Money Charity. Yeah, so we have a debt problem in the UK. It isn't a primary focus of the governments, but I do believe this is definitely something that the Lord wanted me to talk about in this course. So let's look at some of the common debt traps, because there are many. And as I say, they are designed to keep people indebted. What the banks want and the financial institutions is good payers. Yeah, and remember I said that's not a kingdom principle, that's a world principle. But you might recognize some of these traps, and they are traps for a reason, because they are devised to keep you in a constant cycle of borrowing. As as of today, I want us to say no more. As children of God, these traps are not our portion. So let's talk about the first one, creating a cycle of increasing debt by refinancing too often. So we've talked about refinancing debt today in order to repay, but if you keep doing it and then creating more debt and then refinancing again, it's great for the banks, it's not good for you, and you will pay an awful lot of interest. Not asking for help. I see this a lot. People don't ask for help if you're struggling. And I promise you, I've had people who have asked for help and are now in much better situations since doing this course. Please don't keep quiet. Using payday loans, that's a trap. It's a vicious circle. If you can avoid that, please do. They're also very expensive. Borrowing more than you can realistically afford. And one of the common ones is looking at the minimum payment of a credit card and thinking, oh, I can afford that. But remember, I've showed you the scenario of if you only pay the minimum, you will be in debt for a very long time. And then if an emergency arises, you then use the credit card again. It's like an ongoing situation. And there's no way you can have a life free of worry when you've got that happening. Taking out debts with excessively high interest rates. Sometimes it's not a choice because your credit score might not be that great. However, pay attention to interest rates. They do matter. Borrowing based on a future expected event. Wait for the event to happen. Don't borrow based on that thing happening. And then not repaying. So if you do go for a 0% deal, if you don't repay it by the end of the period, in some instances, depending on the type of credit, you'll need to read the terms and conditions. They actually put on all of the interest for the 0% period because that's in the terms and conditions. So let's say you had a 12-month 0% and you paid it off in the 13th month. They pile on all of that interest from the 12 months. So you've got the capital that you've borrowed plus the interest. So it's as if you didn't have the 0% deal. And there are contracts that say that. So please do, if you've got a 0% deal, pay it off by the end of the period. And then the last one, which we've admitted we do, is paying for things that we don't need with money that we don't have. So having that emergency fund, which we talk about next week, making sure you're building up something for rainy days. We're all going to have rainy days. That's just part and parcel of life. Now is your homework, and this is for those that do have debt. So obviously, if you don't, then just pay attention to the session so you can educate. That would be your homework. Educate, because we know the statistics say a lot of people have debt. You're bound to have someone in your family who will. So what I want you to do is I want you to first complete your debt summary, which is the summary of all your debts. Write it down, make it plain. Then I want you to revisit your budget planner and your spending tracker you completed and confirm whether you can make changes in your spending to redirect some money to that debt. And consider how much. Be realistic. This is not meant to be a punishment, but it might be that you change some of your priorities for a period of time. Yeah. Think over what debt repayment strategy will most suit your situation, whether it's avalanche or snowball, and also think about whether debt refinancing is suitable for you. Your banks would normally help you with that, especially if you've got a good credit, or you can look online. Use the debt tracker to keep a track of your debt repayments, especially in the early period. And of course, take action. £10 a month, whatever it is, everything counts. The other thing I always encourage people to do is when you get a pay rise, Keep your life at the same level that you currently live at. Use that pay rise if you are employed, of course. But the key is to take action. Now, practically, this is a good plan, which is very important. However, in addition, I want you to pray over the debt summary and I want you to ask the Lord to help you. Tell him how you feel and what you need. Psalms 34, verse 17 states, "The Lord hears his people when they call to him for help. He rescues them from all their troubles." You're not meant to walk this alone. And there is no shame in admitting. He knows anyway. You can't keep secrets from God, so he already knows. If you have these debts, don't just work out your plan and think that's fine. No, pray over it and be guided by the Holy Spirit. These plans are great and will help you reduce debts, but if you keep spending on the credit cards or the store cards, then it's going to be counterproductive. So it is vital you stop using these facilities unless you can repay them in full every month. What I want to say is ditch the debt and walk in freedom. That is really key. This is all about freedom. That's what financial freedom means. It means a life not filled with worry. Now, there are some things that I've also got for you. So you might be thinking, this all sounds good, but I could really use some help with this. The good news is that you're not alone. Not only am I going to share some support that's out there, but also on my website, there is a blog that's packed with various different topics. But one of the blogs I want to highlight is one all about debt. And it also includes a debt support guide that you can download and use it straight away. At the back of it, it's got places where you can get real practical help. Do not be ashamed. When you speak to people in debt specialist companies, they are so used to it. So there is no reason to be ashamed. Just speak honestly and from the heart. And if debt is something that you are facing, please don't suffer in silence. A problem shared really is a problem halved. I've seen it too many times where people keep quiet, hoping things will get better, and they don't, they get worse. So let's not do that. Let's choose support, wisdom, and action instead. You're not alone on this journey. There are so many organizations in the UK because we have a debt problem in the UK. But if you don't feel that you need to talk to one of those and you can repay your debt and you can put the plan in place, then please do, because that's what this session's about. The other handout that you will get, once you've chosen your approach, you're going to need to update your action plan, which is going to include the steps that you feel are realistic and doable for you. Like I said, it's not a race. Some people, it might take a few years. For others, it could be quicker. And even small steps count if you do them consistently. So I've got this example, and you'll find a copy in today's pack. It's also already in the workbook at the back. And I'll also pop a glossary of commonly used terms at the end of this presentation. That, as I say, the list of places where you can get help and support specifically for debt if it's unaffordable debt. So like I said, if you're thinking that debt isn't your issue right now, that's okay. Remember the statistics I shared, and do make sure that you are talking to family and friends, people you love who might be going through this silently. And even better if they don't know the Lord, because it could be a great opportunity to introduce them to Jesus, to his wisdom, his peace, his plan for financial freedom. And just imagine what a blessing it would be if you not only help someone find financial peace, but also at the same time introduce them to the Prince of Peace. There will be a double blessing right there. So I definitely encourage you have these conversations. I've got another blog post talking about being silent. And I think, especially in the Black community, we don't talk about money enough. That doesn't mean use money as an idol. It means being honest about some of our struggles. And just try and find those people that you feel comfortable, because the conversations matter. In summary of today's session, we've talked about quite a lot. As you know, there's a recording. You'll have the recording. Do revisit it. We've explored the different types of debt and the problems with revolving credit, which is the most common debt. We've explored the biblical references to debt and the blessing of being debt-free, because it is a blessing, and the different repayment strategies you can use to clear your debt. We talked about some of the statistics, so you know that if you have debt, you're not alone. It's the norm in the UK. And then your homework task was to use your debt summary, record all your debts, pray over the debts, revisit your budget planner, and your spending tracker to identify ways that you can allocate extra money to repaying those debts. Obviously, you will determine what strategy works for you, avalanche or snowball or debt refinancing, or a bit of all, depending on what your position is. Do have a look at the website. There's help on there. And once I finish this course, we'll be adding more stuff on there as well. So make sure you're signed up to the newsletter if you're not. You do automatically get signed up most of the time unless you've clicked no, I don't want to be kept updated. If you did, then go on the website and sign up for the newsletter. And last but not least, please remember to update your action plans with what you're going to do. That's your commitment to you. I'm never going to ask you to share your action plans. This is you committing to yourself. You look at the example. If it is that I can save £50 and I'm going to pop that and just clear my debt, then so be it. Because as you start seeing that debt go down, I promise you will feel a lot better. These are the useful contacts that I'm going to post in the WhatsApp group. Don't worry if you can't see them, because you'll have it to download, or it is also in the workbook as well. Hopefully today has been informative and helpful to you all, whether you have debts or not. But as usual, if you need to dial off, you can dial off. But if anyone has any questions, I'll hang on for a bit. Please feel free to ask them, because there is no such thing as a silly question.
Thank you, Natasha. That was really interesting. They say that debt is the slavery of the free. So we don't want to be a slave. So we want that financial freedom. So, Lord, we want to thank you for using your servant tonight. And Lord, I just ask that you just speak to each and every one of us about our spending, about our finances, and how we can better improve. So, Lord, we just ask you to go with each and every person here tonight. Bless them and keep them safe. In Jesus' name, amen.
And that's a wrap on session 3, Understanding Debt. Can I just say, if this session brought up some feelings, that is completely normal. Looking at debt honestly, naming it, writing it down, that is not easy. But you did it, and that matters. I want you to take a moment to celebrate you. You showed up, you could have clicked on anything else today, but you chose to invest in your financial future. And that's not small, that's a big deal, and I want you to own that. So your homework's in your pack or your workbooks, and I really want you to do it. Sit with your debt summary, pray over it, go back to your budget planner, find the money that you can start working on this, and then make the decision. Snowball or avalanche, pick your strategy and take the step. If you need support, I've shared a list of organisations in this session who are there to specifically help. Please use them. There's no badge of honour in struggling alone. Now, before you go, if this course is helping you, I'd love for you to like this video. It really does help more people find it. Drop a comment below and let me know what your biggest takeaway was from today. Or just say hi. I read them all. If you haven't already, please subscribe, hit the bell so you never miss a session. We've got more to come and you do not want to miss it. Trust me, session 4 is a good one. We're talking saving, investing, building wealth on purpose. But until then, take care of yourself. God bless you and bye for now.